Hello and welcome to 2024, the year of the dragon, and what's expected to be a very positive year for economic growth and business growth among many individuals that are pushing for more. As for the actual markets themselves, let's have a look at what the big guys are looking at and what they're expecting in their outlooks and forecasts, along with what the market itself is actually offering up. So we've got here an MT5 chart, and it's the AUDUSD and the price that it opened at the start of this candle, and this one's at the start of the week. So we're on a weekly chart, and I'm going to run through a range of products, so symbols such as the AUDUSD, EURJPY, and index markets, and just have a long-term outlook of the charts and what they're kind of representing as far as opportunities go in the trading world. On the Global Finance Trading website, there is the Global Financial Market Outlook for 2024. Links in the description if you want to check that out. But basically what I've put together is reports and economic outlooks for 2024 from a lot of the big guys such as JP Morgan. You've got Charles Schwab, Macquarie Group, and CNN as well. So a lot of reports that come up for outlooks for 2024, and they give a snapshot of what each are talking about, as well as the link to actually visit the full article if you want to read into it more. But basically it's a bit of a snapshot. If you want to get ahead and understand what's meant to be happening in the markets, and at least understanding what people are talking about versus what actually happens in the future, it's a really good way to set yourself up for a successful financial year, and 2024 is set to be a big one. So that's it as far as the website. If you want to read more from the pros, check out that page and the links that are included. But I'm going to now run through the charts and see what I'm considering for this year, at least for the first few months. So we've got here the AUDUSD. Now we've been tracking down from the high 70s, almost reached 80 cents back in 2021. We've basically been crawling down over the past couple of years, and we have actually touched the top Bollinger Band here last week, and we were starting to come down again. So do you think we're going to keep trending down further, down this way? Or is it going to break the cycle and ignore this Bollinger Band here? So this is the AUDUSD, or the Australian dollar, versus $1 US. So 68 cents at the start of the week, bought $1 USD. So that's how it always works. You've got the front currency and then the back currency. And then this one here, the AUD, for example, will be priced to one single unit of the USD. Now, that to me looks like it is going to track downwards for at least a cycle, which is perhaps about 9 bars, so a couple more months of tracking down potentially. And this is based off just the cycle and flow of what the charts and the markets generally do. You can see back here we've touched the top Bollinger Band. We've touched the top Bollinger Band here, here, and here, and then once again we've actually touched it here as well, so just recently. Now we've got also downward confirmation, so we've got a red bar on the weekly chart, which is a really positive sign that we're going to go short. However, there's always a chance the market does go the other way, being wary of that. And obviously on the bigger time frames, they do serve as a really good directional indicator, but holding for long positions, you really do need to make sure that your stops are set appropriately and that you do have the margin and that kind of thing to be able to take on a larger trade that does stay in the market for some time. So AUDUSD looks like it's really tracking down, and this is the kind of concepts that I'm going to be looking at throughout the following symbols. So I'm just going to do a quick review and see what I see on the charts. Do the EURJPY now, 1.1, so the euro is a bit stronger than USD at the moment, but it has in 2022 dropped below that. Now we have touched the upper Bollinger Band on this one. We're kind of bouncing to and fro around the Bollinger Bands and perhaps heading down, but I would say perhaps not for very long. We might get maybe a couple of months of downward movement, but then the cycles seem to be very, very short dated. So we've dropped right down back in 2022 around the middle of the year there. We've had a big recovery, kind of hovering, and it's looking for some sort of indication to either go long or short. But I would say the short people will be in control. The bears will be in control for the moment, but I don't really see it as being a strong movement. Whereas the AUDUSD, which we looked at before, it is trending down. It sort of ticks all the boxes for a potential short. But of course that can always change. You know, the fiscal rules and monetary policy do change. Economies do shift, and things like natural disasters and politics really can shape the way the foreign currency moves. USD yen, so we've come down. So back in 2022 we got really high, came back down in January, almost touching that bottom Bollinger Band, came right back up, and we're not super low in terms of historic pricing. We are quite high still. However, we've touched the lower Bollinger Band a couple of times, and depending on what happens obviously with the economy and that kind of thing, I might expect this to go long for a little bit before then coming hopefully back down to a normalized price. So that signifies that the Japanese yen is quite weak against the USD, because one USD is buying 140 at the start of this bar, but 143 Japanese yen. So it's really quite weak compared to back here when it was trading at about 107. We've got the US 30, so this is the US top 30 stocks by market capitalization. And as you can see, Bollinger Bands are really strong on this weekly chart. You know, on the larger time frames, they really do paint a good picture of where the market could be heading and where it's starting to find perhaps a bit of weakness when it's really far out from its mean. So we've come down close to the 30,000 mark, and now we're trading very high. In fact, all-time highs according to this chart. Just see if we can go back a bit further. Yeah, so all-time highs. It really has a lot of power behind it. So getting short on index markets is a tricky one, because the whole basis of a market, such as an index market where stocks and businesses are all trying to push forward, there is a bias for these markets to go long over the long term. We do have often very sharp declines though, particularly around these levels where the market does touch that upper Bollinger Band. So as you can see back here in January 2022, it was very close to it, and we had about 3 weeks of very heavy bearish momentum there. And then a couple of weeks back from that point, we saw that again. And you can pick it out on multiple different situations. As you can see down here as well, it touches the bottom Bollinger Band and really powers up. While I do think the US 30 is probably due for a bit of a downward motion for perhaps 2-3 months, there is always that chance that it does keep powering up. And unless we actually do a good push into these Bollinger Bands, signifying that people might have more reason to get short and take their profits and that kind of thing, it does look like there could be a really good shorting opportunity, but there's always that chance that the index markets in particular go long. Now, the difference between index and forex is that two countries are versing each other with forex. So you've got, say, the EURJPY. They're trying to battle it out against each other for either a lower currency rate or a higher currency rate, and they've got their own agenda. Each political party, each business, and even investors, they've got their own agenda as to where they want that currency to go. It could be up or down, depending on the location and where their currency is currently at. Whereas businesses, basically every participant other than short position holders want the market to go up. That's the basis of it. Everyone that holds stocks in a normal sense, they just want the market to go higher. As a general rule, obviously you've got shorters and that kind of thing, but one thing to note is that short positions generally do have to buy the index or the stocks underlying in order to then be sold a short position from the broker. So shorting does inherently actually push the price up. So shorters really need to be positive, particularly whether it's stocks and that kind of thing, that they are expecting the market to go down in the future. US 500, so we've kind of hit a double top here. And basically I would expect this to kind of come down for some time by the looks of that. So if it's anything to go by, obviously Russia invaded Ukraine around this time, like around 2022, and it really did keep that downward momentum. There was a lot of distress, inflation, that kind of thing going on in 2022. But there is a chance that this market could come down for at least a couple of months as well. So all the index markets in general are very high, but we're now going to flick to an example that isn't very high in its historic moments, and that is the Hong Kong 50, so the HK 50. Now, this one has actually touched the lower Bollinger Bands in several occasions previously. It's in a heavy downward trend, so I'd be concerned to actually go long on it. However, I would expect that the market will respect this touch of the Bollinger Band here to some degree and perhaps go a little bit longer before it pushes back down. Unless something changes in the Hong Kong market, it's something that I'm not sure whether it will actually recover just at the moment. Obviously there's a lot of problems incorporated into this market. It's just kind of gone down for a very long time. There hasn't been much reprieve at all, so it's a very concerning time for anyone that does operate in the HK50, and who knows, at some point there's likely to be value in these lower values of the Hong Kong index, and somebody might start to buy it up and it could potentially take off. So back to the all-time high type situation, we've got the German 40 now. So all-time highs, this is a weekly chart, and basically we've had a really strong push up off these lower Bollinger Bands. We've come very close to touching these bands up here, and we're kind of consolidating and coming down pretty heavily now. So I would expect the German 40, again another index that is expected to perhaps go down for another few months. And in the reports, if you go to the website with the link in the below description, it does say there's a U-shaped recovery. So in terms of recovery, I'm not really sure what they're relating to, because the markets are very high up in terms of the index markets. So if it's going to recover, it's already at all-time highs. So that kind of commentary doesn't make too much sense to me. And that's why I really like to go over the actual charts, the real pricing, and see what traders are actually sitting on and stockholders, to see what the value of their positions has actually made them. So basically anybody that's been holding the DAX from anywhere from before this candle here will basically be in profit. It's at all-time highs at the moment. And very similar with the US 30 and US 500. So it's a very strong market. It's a very strong economy, and I think it was kind of brushed under the rug by the media and that kind of thing. They kind of wanted to keep this whole the economy is in trouble type mentality. I don't particularly agree, and I always like to check the actual prices. Sometimes I get comments where people say, oh, this Bitcoin's crashing, and I'll go to the charts. I'm like, well, my position's actually gone up from this morning and the last week, so I'm not sure who's commenting on these types of things and what the media is trying to represent when the price has actually gone in the other direction to what they're saying. So always be wary, and always check the actual price. And that's the whole purpose of this video, to show you what's going on. We've got the FTSE, the UK 100, it's the London Stock Index market, and it's been very steady from about 2021. So about mid-2021, it hasn't really moved all that much. It's just sort of gone up and down within a reasonable level of range, not like the DAX where it's really crumbled and really accelerated. The FTSE has actually stayed quite steady. I would expect it to probably come down to these lower bands as it kind of is in this channel. I'm expecting it to perhaps come down for another few weeks, maybe a couple of months even, and then come back up higher again, but not really expecting anything too major. Obviously, if there is a heavy downturn and we break these areas below here, I would expect the market to really decline quite heavily, but it all depends on the macroeconomics and what's going on around the world. Through the Ukraine war, the Israeli war, all of that, the FTSE has been quite stable. It hasn't really gone anywhere. It hasn't done anything immaculate, but it's held its own. So it's really quite a stable index. And if you were looking for growth, obviously you'd be looking towards the US or the DAX. But really good traders market, it does respect the levels quite well to some degree, the FTSE, but there is a bit less volatility, so you've got to weigh up your options with how you like to trade. Over to the Aus 200, the ASX Australian index. This is the top 200 companies by market capitalisation. Now we have touched all-time highs this week. So 7590 looks to be where it opened. It did go up a little bit at the start of this week, and the week before we did actually touch that upper Bollinger Band. And as you can see here at this point, and then back here as well where it actually did touch the Bollinger Band, we had really sharp declines over the next sort of month. So I would expect that the Aus 200 is going to decline for the next probably month or two before it'll come back up again. I don't necessarily think that we're going to have a full meltdown, but that all depends on what happens with the wars that are going on around the world, supply chains, that kind of thing. So we'll have to wait and see. So we've done the AUDUSD. I just want to have a quick look at cotton. So we've really come down. We're at super high levels in 2022. We've kind of hovered down around these sort of normal pricing levels. Obviously the market got a bit spooked and just held its own. And I would expect the market to probably come back up again at some point, but I'm not familiar enough with this market to understand why it might actually move up or down in a macroeconomic scale. So that's the chart though, just so you're aware of what cotton did over the past few years on a weekly chart. Japanese 225 index, so the Nikkei is the top 225 companies by market capitalization, and it hasn't had much movement for the last couple of months. It's like they're taking a bit of a Christmas break, and we're kind of in the middle as far as these Bollinger Bands go. However, we are quite high as well in terms of historic pricing. So I'm just going to zoom out and see what's, it goes back to 2017. Quite a bit of growth over the last few years, but only time will tell where that one goes. I don't particularly have a view on this one. When the currency is weak, obviously it looks like it's kind of tracking to some degree in line with the currency. As the currency weakens, this index goes higher because it's cheaper for external currencies to actually come in and buy that index. It may come down for a little bit and then perhaps track back up, but I don't expect too much movement out of the Nikkei. However, there is that earthquake that happened recently which may affect the markets. Over to crypto, so we've got XRPUSD. Very volatile markets, as you probably already know. We did have a very strong push down earlier this week, and it's kind of tracking back up. It looks like it's building on the whole, so like people are actually purchasing units and holding onto them perhaps, and they're not necessarily selling them all that much unless they get up to outside these Bollinger Bands here. It pushes the market back down, so it's really becoming quite stable to some degree. So we'll just have to wait and see what the crypto market has in store. There is that SEC case as well that has been haunting the XRP Ripple team for quite some time now. And I'm no legal expert, so we'll just have to wait it out and see what effect actually happens in the future in the crypto space. US dollar CAD hit the lower Bollinger Bands. I would expect this market to push up higher for some time. So up to the other side of the Bollinger Bands, up to these highs, I would probably expect that that will happen because we've had such a strong response this week. So that's quite good confirmation. Pound US, we're really in no man's land here. So we're right in the middle of all this sort of pricing structure. It's very messy. There's no particular direction. I would expect the market to perhaps come up a little bit higher before it does come back down. So, perhaps over the next month we might touch the higher Bollinger Band and then come down further, back down to perhaps the 1.19 pricing. Again, this is a very messy chart. So in terms of determining a cyclical price and a seasonality type of situation, I'm not too familiar with this currency as such. US dollar CHF. Now the CHF is the Swiss franc, and it has touched the lower Bollinger Band. You can see that it happened here and here as well. Obviously you'd taken some heat on that first one. There was a bit of buying coming back in there, and very strong buying after this one. So will this be another very positive push up for the US Swiss? We'll have to wait and see. I would suspect that it will come up higher. However, the Swiss currency decision makers have pulled the rug on ceilings and floors in the past, meaning that they won't always protect the prices that they say they're going to. They could always pull it out and watch the market basically fall or rise rapidly. They're not against that sort of a policy decision. So always be wary that the Swiss franc, they have made some pretty wild decisions in the past that send the currency into a spiral. So I believe it was back in 2016 or 2015, the Swiss franc made a decision where they stopped protecting the floor price, and it dropped very rapidly, very fast, and it almost sent some brokers into bankruptcy. They were in a lot of trouble. However, I think a lot of them did get bailed out and protected, but it's always something to be aware of, that sort of a situation can happen. You just need to be aware and make sure you monitor your positions quite well. New Zealand USD, so NZDUSD, we've touched the upper Bollinger Band, so it's in a very similar space to the AUD versus the USD. Same region or very similar region of the globe down in the southern hemisphere. So I would expect this to kind of follow the similar path that the AUD USD would, and perhaps track down for the next few months. Euro New Zealand dollar. Now we've hit the upper Bollinger Band around the middle of the year, last year, so 2023, and it doesn't necessarily look like it's going to go long just yet. I would perhaps expect it to come down and touch some sort of either the Bollinger Band or this pricing down here, for example. But the euro it's quite messy. It's not necessarily respecting levels from previous price points. So we'll just have to wait and see. I think that one might come down a little bit further before it does go up again. AUD NZD. So comparing the two, they've been very stable over the past few months. So they're not really moving all that much against each other, and they're battling it out against the USD, and I think they're going to start coming down as a pair. This kind of action is very stable. I don't particularly expect it to go anywhere in particular. The pound NZD. Just having a look, so very similar to the Euro NZD. I think there is some steam to keep coming down further. However, it does kind of look like it is turning around a bit. We're down below, near the lower Bollinger Band, but we're not quite there. So whether it turns around early or not, I'm not too sure on that one. But there's no clear indication of where the pound New Zealand dollar is going just yet. However, back here, it was basically all-time highs, really good potential selling point when it reached this area up here. But hindsight's always 2020. New Zealand, Swiss franc, NZDCHF. This isn't one that I really look at basically ever, but we've got a super low pricing here. You know, the Swiss franc really, the New Zealand dollar really dropped at this point, came right back up, and we're trading around that level at the moment. So there is potential that it will eventually come back up and normalize to some degree, but perhaps this is the new normal and perhaps we'll drift down further. There's no clear indications to me that this currency is going anywhere just at this moment. New Zealand dollar, Japanese yen. Again, this cross is a bit messy. It's quite stable, and there's no real clear indication. I think it looks quite positive, and it might keep drifting up a little bit. The yen is showing a lot of weakness at the moment, so I might expect it to come up a little bit before it drifts back down again over the coming months. So all of these New Zealand crosses don't seem to be really that clear as to where they might go. New Zealand dollar CAD, on the other hand, we have reached a kind of a high point here, and we have touched the upper Bollinger Band, but there is much higher pricing in the historic area. So I would expect the market to come back down. However, I am mindful that all this pricing here could allow the market to continue pushing upwards. So again, not the clearest of setups in terms of the long-term weekly chart trading for the New Zealand dollar CAD. Aussie dollar CAD, quite a similar situation. Obviously we did have some lower pricing below. We're quite high in terms of Bollinger Band pricing, but not in historic pricing. The market seems to kind of do a slope up and then really slide down, slope up and then slide down quite hard. We've sloped up again. Is this another slope up? And perhaps we'll get a little bit higher before we come back down again on that one. AUDCHF, very similar to the New Zealand dollar CHF, Swiss franc. We're at kind of the lows. I would expect it to perhaps at some point go higher. However, we're aware of the rules that the Swiss franc put in place around their currencies, and they don't always hold these floors all that well, so it could always drop out. So you've really got to watch the news and stay updated on that one. Euro AUD, it's in the middle of nowhere. So we've hit the high Bollinger Band here, coming down, and we're kind of in line with some of these prominent price points all along here. So this could be a point where it does start to go long again. We're quite close to the lower Bollinger Band, and I would expect this market to kind of track up. There is a lot of chance though that this pricing structure does break through and it keeps going short though. So not the clearest of setups, but I would anticipate that this will go long if we kind of break up above this level here. The Euro Swiss franc, it's not so similar to the AUDUSD. So we're hitting the bottoms and it could really turn back around. I'm just loading some previous pricing up to show you what actually happened back in, it looks like it was 2014. The event that I'm referring to happened in 2014, and it was really quite a devastating event for a lot of financial markets because the Swiss franc basically had the floor dropped out from it and it just fell really sharply and really quickly. So obviously any buyers of that will be quite concerned, and that's probably why you don't see a huge rally in that way, because people are probably concerned that the Swiss franc may drop out once again, as it has before. The euro pound, it's right in the middle of nowhere, so I don't have any tips on that one. It's been very stable for most of last year. Hasn't really had too many major movements other than this little drop here. Pound AUD hit a top here. We've had a really nice decline from that point. We've had two green weekly bars close to this lower Bollinger Band. So I would expect that this market does climb back up higher, perhaps up to these sort of levels here at the very least. Oz Yen, AUDJPY, trading at really high levels as per many of the JPY crosses. However, I would expect this to perhaps drop down at some point. So the AUDUSD is anticipated to keep dropping, and I would expect the AUD Yen to also drop, because hopefully the Yen will find a little bit of strength at some point as well, adding to the decline of this currency pair. But it doesn't really look that it's sort of changing its tune over the last couple of years all that much. So relatively stable as far as the currency market goes. The pound Swiss franc, probably going to be very similar to the euro Swiss franc, and it is, so we're actually down on the lower Bollinger Band. I'd expect maybe a couple of weeks like we did back here of positive upside, but again, people are scared of buying the Swiss franc crosses because of these situations here where they just sort of drop right down, really volatile at certain points in time, but very stable throughout regular times. So it's just, it can really build a false sense of security, and then they do some sort of a crazy announcement that pushes the market way out of whack. We've got the pound yen, again, very similar to the AUD yen, not too sure where this market's particularly going. Would expect it to track upwards for a little bit and find some strength against the yen. It hasn't had much movement either for the past sort of 6 months or so. CAD Swiss franc, so the Canadian dollar versus the Swiss franc. It looks a lot more stable than the other currencies that are versing the Swiss franc. We've had some really some drops into the Bollinger Bands here, and then it's had some really nice sort of sloping upward growth at a lot of these points. Potentially we might see that again, so we might see some really strong positive motion. We are trending heavily down, so I would be a bit hesitant to go long on that position, even though we're down at the lower Bollinger Bands. CAD yen, very similar to the pound yen, perhaps might go up a little bit higher, but then it really hasn't moved, so it's really hard to judge that one. We've got the Swiss franc versus the yen, and it is powering up. So the Swiss franc has built a lot of strength against the yen, meaning that it buys 169 yen for its 1 Swiss franc. I would expect this market, if they're all going to flow together, that the Swiss franc will eventually come down against the yen, and all the currencies, obviously the ones that are down here for the Swiss franc, will come up and rebalance. But there's no real clear indication that anything's going to happen like that just yet. Euro CAD, we've come up and hit the highs recently, and then it's come right down, right in the middle of that middle Bollinger Band, basically like a moving average. And we didn't get much movement at all throughout 2023. It was really in a channel, essentially. So it's in the middle of nowhere. I might expect it to keep dropping towards the lower end of the channel and then sort of keep tracking up unless something changes to actually shake it up again. We've got the euro yen. It's been quite volatile over the past couple of months. Really tracked up, came right down, hit that lower Bollinger Band, and perhaps we're on a trajectory back long again to hit these highs. But again, not too familiar with the yen in terms of what's been happening lately, where the market hasn't moved all that much in this period here. So we kind of need to look at the news and understand the fundamentals behind what's actually going on to make a better decision. Got the pound CAD, very similar. It's in no man's land. nothing really that I can point out here. We have touched the lower Bollinger Band back here, and we've kind of touched it up here, so we came down, came up, we didn't hit it, so I would expect that perhaps we're still on the upward trajectory and this was a retracement. So I'd expect the pound CAD to perhaps go long over the next few weeks. And we've got gold, XAU. So XAU is the chemical, the chemistry, the periodic table letters that is assigned to gold, XAU. And then you've got USD. It's AU is the symbol. So for gold, it's the periodic table AU. And then against the USD, which is the standard conversion that most people use. I would expect that if things settle down in the world in terms of the conflicts around the globe, this would again settle down and come back lower. So people are buying gold because it's a physical conversion into currency. It holds a value even if governments collapse, for example, and it's an established value of measurement in terms of some sort of a currency form. So there's always strength in gold when conflicts arise. This didn't quite happen though when Putin invaded Ukraine. It did power up quite heavily, but then it declined throughout that whole conflict period. I would expect the market to probably, I think it might come up first, a little bit higher first, and then actually track down. Because we've got these really positive green bars here, I don't think we're done with the upward movement just yet. Now we've got silver. AG is the chemical compound, or the chemical name on the periodic table for silver, and that's why it has the XAG as its symbol into USD. It's priced at 22.96 at the moment, and we've hit the lower Bollinger Band here. It came right up, touched the top, and then we're probably on the way back down to touch the bottom Bollinger Band once again. And we've got Brent, it's a form of oil, $78 per barrel, and we've touched the lower Bollinger Band. So we did that back here as well, had some positive movement, and then again here, positive movement. Almost touched the upper Bollinger Band but didn't quite get there, and we're here again. So I would expect the market for Brent to go up a little bit higher. Now there was a situation back in COVID times, so this period here, oil really went downhill. People stopped driving, people stopped shipping things around quite a bit. Places were shut down, so you couldn't go anywhere. Airliners couldn't fly, that kind of thing. So oil really took a tumble, and there was a point where I believe it was the futures dropped below $0, so people were actually getting paid to hold oil because there was so much available, and if you had an oil tanker, you would have actually been paid to actually hold and store that oil for people at that period of time. And that brings us to the conclusion of this market overview. I hope it was helpful. It's just my insights as to where price actually is. The media tends to spin things and has an agenda and that kind of thing. People are actually paying money to these providers and influencing them in certain ways to get their story and get their thoughts and views positioned as they want them. And it's important to understand where the price actually is. So when markets, for example, stock index markets are really low, you'll hear a lot of doom and gloom type commentary in the market, in the media. And that's a really good indication that perhaps it's a time to start looking at buying positions. Because when the market gets really low, people are, if they're going to continue holding, they're not going to sell, and the market's at a really low price, so there's plenty of upside, even with the historic pricing that's already there to give value. Whereas buying at prices where they are now for a lot of these indices, aside from the Hong Kong 50, which is quite low, all these other indexes are trading at really high valuations at the moment. And for those markets to really go much higher than they are right now, you would need some sort of really big shift and positive influence to heighten them up. One thing that does push them higher is the Fed spending and their fiscal policy, that kind of thing. They'll bring interest rates lower, they'll introduce quantitative easing and basically flood money into the market, and then people with extra money might go and then buy these index markets or the stocks that underlie them, and that could drive up the index markets. If there's quantitative easing and money printing, that kind of thing. Considering there's a lot of inflationary troubles at the moment, that's probably not going to happen, but it's just something that I wanted to share with you to look out for. So when there is quantitative easing, the index markets can inexplicably, to some extent, just rise because people are buying those indexes, valuing the companies higher than perhaps what they're worth. And that's how the markets can also get an extra boost. That's it from me, guys. Go and check out the actual outlooks from the actual researchers of these big firms. They put a lot of resources into these kinds of things, and it helps people understand what's meant to be actually going on in a different sense. So I'm just looking at pricing here. Of course, it's not financial advice, it's just more of a hobby and something to understand where prices are at in a general sense. Whereas those guys, JP Morgan, Charles Schwab, those organizations have all the resources to put together a really good report. So go and check it out. All the links are in the website itself, so you can actually read the snapshot and then go and read the full report if you wish. And enjoy your year. Best of luck. It is the year of the dragon, so go and get them and have a prosperous year. Thank you. Just remember to like, subscribe, and comment if you have any questions. I am pretty active on here, and I like to get back to everyone that I can. If you have questions, I'm happy to share my thoughts.